Hey guys, so today I'm going to be walking through my live trade that I took last week. I want to share with you two powerful trading principles which will really help you to stay profitable and also trade stress-free. What I'll do is I'll walk through two trades that I took. One of the trades that I took, I made a loss. It was a small one, but on the second one, I made about a 5R. So I'll walk you through it. What you can see here is a 1 minute time frame. What I was looking for was a break of structure at the 30-minute time frame fib. So I've already set that up. On the 23.6 level, after price touched that, I was looking for a M1 break of structure. And what added to this position was that there was a M30 support line here at the 23,709, and you started to see price consolidating. What I didn't really like about this trade, which is why I didn't scale and why I was watching to see where the price would go in the opposite direction, was I was looking for a long. And that means obviously I wanted my simple moving averages here. I've got three. I wanted the longer term one to obviously be up. I wanted the shorter term one to be up and my super short term to be up as well. But as you can see, they're all pointing downwards. But just because the price actually hit the level that I was interested in, I actually decided to take this trade. So I'll walk you through it. Price touched the 23.6 level, as I said. It started to show signs of reversals with the M1 candles, so started to look quite interesting. What ended up happening was there was a brief long move, which most novice traders would probably enter into. I wasn't particularly interested because there wasn't a clear break of structure for me. Once price hit that M30 support, now turned into resistance, price actually went backwards. So this created a M1 higher low because this was moving downwards, but it was a significant point for me, which I was interested in. If price broke beyond that, I'd be interested in for an entry. And I actually took this one and I'll walk you through it. So we see price pull back a bit. As I was saying, some people would have entered there, but I wasn't really interested at that point, especially with the simple moving averages moving down. I'll just fast forward here. So price actually started reversing upwards. I drew my rough idea of how much pips I'd be risking. And basically, I was in the mindset that the moment I saw a break of structure, I'd be really interested in getting into the trade. As you can see here, I had a really strong long M1 candle, which was the trigger for me. I just needed to wait for it to finish because I didn't want it to pull back. I'll fast forward. It ended up actually being a candle that was decent. I took the entry. I drew up some fibs just to give me a rough idea of when and where I'd exit so that I wouldn't expose myself to full risk, especially because, again, the simple moving averages were just moving downwards. So walk through this trade. It was quite stagnant. It didn't immediately move into profit, so that kind of told me the momentum was quite small. As opposed to the fast moving trades that I'm used to. So at this point, price has already pulled back to 50% of the area of risk that I'm willing to take. So obviously I'd be willing to take all the way to the 100%, but price was already touching 50%. And I'll walk through this entire trade and give you that principle that would be really helpful for staying profitable in trading. So at this point, because it hit around 50% of where I wanted to be, I think the probability of this becoming super profitable started to decrease. So I was being super wary and I gave it a little bit longer. It started finding support and showed a bit of a reversal here on this candle at around 80% of my full risk. I was prepared to close the trade immediately if it crossed that mark, but I just wanted to see where it was going. It might make the same move here and reverse upwards. So I'll just fast forward what happens. It ended up going back to my point of entry, so it was at break even at this point. But as you can see, another reverse candle here set up. And I'll just fast forward a bit. So even though it reversed, it was still quite slow, and usually you'd want it to move a lot faster. It was still quite slow, even though now it's in profit. So things started looking more promising in terms of the move forming, but because the simple moving averages were quite against where I needed them to be, it wasn't really something that I thought was going to be worth hanging on to for too long. So this candle here is already telling you it was quite a bit of struggle. Price was moving quite a bit, as you can see right here as well, but it just had a lot of exhaustion. While there was a lot of bulls entering into the market, there was also a lot of sellers just pushing that price down. So it's struggling quite a lot, as you can see on this candle right here. Now, I'm gonna let this play out because I want to talk about it. Okay, I'll pause there. So, as you can see, it was a decent point of entry after the M1 break of structure. And the principle that I really want to walk through with you is taking small and swift losses is always going to beat hoping for no losses. Every time everyone is going to try and hope that, okay, I'm in a little bit of a negative position. It should be a lot better for me to just go into profit, just hang on and see what happens so that basically on the books, I haven't taken a loss. But I'll just show you with this example here. So I've gone up and I've gone down, I've gone up and I've gone down, and actually it reached my point of entry, went all the way up here, started showing some exhaustion, and it just quickly reversed. Now, later on this trade, I did take it again, which I'll walk through, but for now, that principle of taking small and swift losses and how that beats hoping for no losses is always the best way to go because of three reasons. One, you don't stress yourself out. And I think that's a really important lesson for traders who are new, that protecting your energy and your emotional capital and trying to be as stress free as possible is really what's going to lead you to become a successful trader because of the time, the energy, and the focus it takes to stay in a trade that really isn't moving anywhere. Secondly, it protects your financial capital. So obviously, if you blow your account, you won't be trading for very long. Having that ability to take small and swift losses consecutively is going to make you more profitable than having a gigantic win rate just because you've held onto a trade for 5 days as opposed to 5 minutes because you didn't feel that the momentum was there when you entered. But what I wanted to show you here is that actually I could have exited this trade a lot earlier. So as you saw the exhaustion candle appear here, because I wasn't really confident that it was going to go all the way long, I should have put the stop loss at break even just so that if it did a flash reversal like this one, and I've done this many trades so many times, usually I am at a lot tighter, but at this point I just wanted to use this example that I did hold on to that trade a lot longer than I needed to. I should have cut it off at that yellow point just to say it's no longer moving the way I wanted it to. And even if it does, I could just re-enter, which is the third reason. why small and swift losses are always better, because you can always just re-enter. And I think that is like a powerful tool and mindset that not a lot of traders get. They just prefer to hang on to a trade, tire themselves out, exhaust themselves out, and they miss out on a bigger trade. Now, I'll get into that one later because that's also a super important principle, but I want to talk about that principle when I show you the 5-hour trade, which is coming. So as you can see, I exited this trade. I was still interested because what you start seeing is, I'll fast forward this a lot, and you'll see me move back and forth a lot on my charts. It's just because I'm trying to minimize the views and the amount of candles I can see in the screen. That just helps me to see things a lot clearer. So the moving averages do start to form the way I want them to, and I became super interested, so I went a little bit too far ahead. I became interested in re-entering a position if price broke above this new higher high on the minute time frame. Why? It's because firstly, price touched that point of interest that I had before on the 23.6 on the 30-minute time frame. And also price is showing aggressive buyers despite how many people were shorting the DAX that day. So you can see there's a lot of shorting activity going down, but at the same time you see this buying activity right at that M30 support level. So I was actually really interested, and as you can see, I've already started setting myself up. I was interested in entering at a break of structure at this point, and as you can see, if I fast forward here, I saw a break of structure, I saw the momentum, and that's when I entered. So by this point, same principles apply. If I started seeing this consolidate again and it wasn't really showing the strong momentum that I really wanted it to, I'd get out. I'd probably set myself to get out around this 25% level, just because that's the amount of risk I'd be willing to take. I've already taken a risk on this move earlier on, so this one here that I closed. I wouldn't really want to try and take it all the way back to 50% again. But as you can see with this move had the momentum I wanted. Straight away, a huge M1 candle, pushing into profit. I was interested in scaling this one, but because of this red line here, which is 23,753, that was the M30 resistance level. So that's the level at which obviously sellers might come back in and this might just completely tank. But with this level of M1 strong bullish momentum candles, it became clear that the bulls were in control. Despite this exhaustion candle occurring, I was just waiting to see if it would break again. So I started waiting, and again I zoomed out, and for me the point of interest became this point here on the M1. That became my new higher high point of entry. So if price right now, as you can see, it's starting to consolidate, it's got some exhaustion candles, but if price actually broke past that, I'd be interested in scaling. I'd take my full position and scale, and you'll see here I did, because it took quite another strong momentum candle through, and by this point I was just trailing. At this point I was quite, so I just zoomed in here because the candles were a little bit smaller there, but at this point I was quite confident the price broke through the M30 resistance level. So actually I was interested in seeing it go to the next significant point of interest, which I found later on, as I'll just keep playing while I talk through this one, which I found later on the higher time frame. So I went to the 4-hour time frame and looked at a point of interest. So I do this a lot just because the candles actually start zooming in and zooming out quite a bit, which unfortunately CTrader does that, but this gives me a better global view. So that red level there, I do write about it, is the H4 resistance that I found, and me right now, what I'm doing here is I'm just tightening my mental stop loss. So if price broke past that yellow line, I'd be interested and ready to cut it, just because for me personally, I think the momentum has run out. I want a move that's just straight solid all the way up and goes all the way in. I take my profits and I move on. But as you can see, I've written H4 resistance there. And what was I interested in? I was interested in these candles moving all the way up there, but also I'd be prepared to exit if I saw at any point in time reverse. Because remember, we just broke through an M30 resistance level. You don't want to stay into this trade if it shows signs of slowing momentum. So I'll just go through this trade and I'll walk through the second powerful principle that I want to share with you. So I'll fast forward here. Price does start to consolidate, and I actually decided, okay, if it's consolidating here, it might reverse. I better be ready. There is a chance it might go all the way just because this is free open air. Usually you want this kind of thing where there's so much free air and room for the price to move to the next significant level, because generally the buyers or the sellers in control just have that freeway access to that point. But as you can see, price starts to consolidate. One thing to notice is that it's actually moving further away from the short-term moving average. Then it starts to get closer to it. This tells me that price is beginning to slow in momentum. So I really wasn't interested in staying in this trade for too long, but as you can see here, I've moved all my stop losses to above break even, so I can't make a loss on this trade. And I'm already watching to see if price would start to move against me. And as you can see, this is the first M1 short candle that actually touches the super simple short-term moving average, and it actually closes below it. So the moment it did that, that's when I was prepared to exit. And as you can see, we'll just watch the trade a little bit longer here. I actually decided to exit there. Okay, so I'll just pause there and I'll find a point in which I exited. And I actually continue to watch the markets just to see what would happen. But I really want to break this down with you because I want to share another powerful principle, and that is it's really just about what I was saying before, hand in hand, prioritizing small and swift losses because it's better than hoping for the potential of a no loss. Because the second principle is you're saving and preserving the energy for better trades. So if you were caught up in the trade previously where you were just consolidating, you were just hoping for it to go back to profit and went back negative. You're hoping for it to go back to profit, went back to negative. That seems like a very simple process, and you'd think, okay, you know what? That doesn't really matter. Like, you won anyway, Jeremiah, so why does that even matter? Well, it matters because, hang on a moment, I am live and I am seeing a trade form, so I'm gonna pause. So coming back, I was just looking at a live trade. Coming back to the main point that I was trying to make with this second move here on the 5-hour trade, the lesson here is really knowing when to exit. So the first one was small and swift losses always beats the hope that you won't make a loss just because of the emotional stress, being able to preserve your capital, and then also having the energy for bigger trades like this. So as you can see, before I was saying, a lot of people take for granted that, oh, if I just hold a trade, that's perfect. And that means I never make a loss. I have a really good win rate, and that makes me a really good trader. No, it makes you a probably less likely profitable trader. Secondly, a probably more stressed out trader. And a lot of those things, if you compound them, 9 times out of 10, you'd probably be making more losses. The key principle here that I want to drill down is just knowing when to exit and saving your energy and your time on the more profitable, bigger move, less stress trades. So as you can see here, When I entered at that point of interest, when I saw a break of structure, price immediately just moved. The difference is obviously you saw all of these moving averages just nice and all these moving averages just flat and or going downwards when I wanted to go upwards. When price started consolidating and started showing more upward movements on these moving averages, that's when things became more interesting. Price immediately moved in the direction I wanted to. And I said before, I was really interested in seeing this price, and I thought there was a good chance for it to go to the 4 hour resistance level. But as you can see here, when I saw price starting to consolidate, you see some exhaustion candles, you see one or two or three um, bearish candles. That's when I started thinking, okay, move my stop loss to more profit or tighten your stop loss to break even at a minimum and see where the trade goes. The moment price broke past that super short term simple moving average, that's when I decided to exit. And later on, I'll show you through an image how this trade actually played out afterwards. For a very long time, I think for at least another 2 or 3 hours, price was just going up and down this area. It was just going up, down, up, down, up, down, up, down. So the key takeaway for that is knowing when to exit and just take profits rather than hoping for more profits. Um, Really, again, saves that time, that energy, and stress. Look, this was probably about 70 to 80% of the move. And it made 5R. It was a good point to exit. It did reach back here after, I don't know, maybe an hour or two. I'll look back at the chart, but it reached back up here, which would have meant that it would have maybe been a 90% trade. And I probably already took maybe 70 to 80 or maybe 80 to 85% of that profit. Now, the point I was trying to make was yes, I could have made 5% more, 10% more, but it wouldn't really be worth my time because I'd be hanging on to that trade for a very long time just to make that 5 to 10% more. Whereas here, as you can see, I decided to get out at that point at the bottom here, and within 1, 2, 3, 4, 5, 6, 7, 8, probably about 20 minutes, I already made what I wanted to make, 80% of the move, and I'm out. I can go do other things. So these two powerful principles will really help you as a trader, and I want you to take away that, and I'll dive into them a little bit more. But I thought these two trades that I took last week were great examples of showing those powerful principles. So one, always prioritize small and swift losses over the potential to lose. And secondly, knowing when to exit, just because when you exit, that's really when you make the profit at 80% of the move and saving yourself that stress, saving yourself more time and also the energy to focus on bigger win trades. So prioritize small and swift losses and save your energy for big trades. All right, so I'll wrap up there. That's all I really wanted to go through for this analysis breakdown. Share those two powerful principles with you, and I'll see you on the next one.